There are 4 factors that I would like to share in this video on whether stocks are better than crypto, or crypto is better than stocks, or is just as equally as good, or should I say, which is more suitable for your personal investing goal. The 4 factors includes risk tolerance, risk of fraud, investing horizon, and it comes down to ownership and possession. Also, I just made a Discord group for our community to connect with each other. We talk about stocks, cryptocurrency, or anything at all. You guys can go ahead and find the link in the description box below. Definitely join and I'll see you there. So stocks and cryptocurrency have major differences. So when you're investing into stocks, you're basically investing into a businesses, so you're owning a fraction of the company, and these are the businesses that have to disclose their financial information, which gives you full transparency. And for cryptocurrency, it is basically opposite of a business. You're actually investing into codes. I know we call them coins like Bitcoin, Ethereum coin, but in reality, we're actually just buying nothing at all, but just codes. So for crypto, its value is purely based on demand. So let's just say Bitcoin. If nobody were to use Bitcoin, nobody were to see like a potential on Bitcoin, then probably the Bitcoin price is going to be like 10 years ago, like maybe $25, $1 per Bitcoin. So if there is no demand for it, the value would not be nearly as much as it is today. A real business has demands and feels needs, and this has been the case for as long as I could remember. So let's just say you want to go outside and get food. Restaurants are here to serve you. You want to go and buy a product. Retail shops are here to serve you. But on crypto, on the other hand, it is purely investing based on your vision, which is what I believe for now. And I think we all can agree that cryptocurrency has not contributed to the society nearly as much as businesses have for all this time. Crypto has also not been around for a very long time, which I believe it was about 11 years ago. It's also way more complicated than just stocks. There are a lot of things like stable coins, smart contracts, etc, etc. So many to a point where I don't even know a lot about cryptocurrency. The first factor, risk tolerance. Stocks are generally less volatile if you compare it to cryptocurrency. You do not see 50% gain today and 100% down on the next day, as it is a real business and the prices of the stock reflects on the business's fundamentals most of the time. So cryptocurrency, a lot of people are saying that it is very risky because it is very volatile. But in that case, those guys that say that it is risky because it is volatile are actually wrong. The risk actually comes from how you react to the volatility. So let's just use my cake portfolio that I'm staking right now as an example. So right now you guys can see that it is worth $666. But believe it or not, 2 to 3 months ago, my total portfolio worth about $800 to $900 US. So let's just say you are the one holding this portfolio. Today, your portfolio worth about $800, and tomorrow it goes down to $400, which is a 50% loss and a $400 loss, but on paper. You do not react well to the loss, and therefore you decided to realize that gains and liquidate all of your assets and cash out $400. Now you're walking away with only $400 left and a $400 loss. And then what? You lost your money because you do not react well to the volatility. And that, ladies and gentlemen, is what I mean by the risk comes from how you react to the volatility and not the assets itself. It is only risky if you do not know what you're investing into and if you're not confident into what you're investing into. Number 2, the risk of fraud. The risk of fraudulent in the stock market does not happen that often, but that does not mean that it does not happen ever. Just take the CEO of Nikola as an example. Trevor Milton was actually charged with fraudulent and was then recently bailed out with $100 million. So shitcoins are more often found in the crypto market. Take the Save the Kids token as an example. Phase K was involved in this big pump and dump scam that was just recently debunked by CoffeeZilla. So there are a lot more smaller cap coins in the crypto market, so that is the reason why there are way more pump and dump schemes in the crypto market compared to in the stock market. The reason why this happens is because the smaller the cryptocurrency market cap, the easier it is to fluctuate it and create a pump and dump on it. And literally anyone can create a coin, just like I did in this video. And if you guys want to check that one out, you guys can go ahead and see how I created a coin, and then brag about how they can change the world and end world hunger and all of that bullshit missionary stuff like that. To get your company listed in the public stock exchange, you'll have to go through a lot of legal procedures and to prove your company's ability and stuff like that. So imagine a stock market that anyone can get their companies listed. Bro, let me tell you, it's gonna be one hell of a shit show. There are little regulation and there are a lot of gray areas in the cryptocurrency space right now. Yes, the Fed Fs are actually trying to regulate the crypto market or the cryptocurrency blockchain in general by October, but that is a topic for another time. So the third factor is your investing horizon. So when it comes to investing, you always have to know your own goals, whether it be long-term goals or short-term goals. And for that, whether it is more suitable for you to invest into stocks or crypto really depends on your long-term or short-term goals and your investing horizon. So for long term, we're actually looking at about 5 to 10 years. So for the long term wealth building, it is best to invest into the stock market, which is proven in the last couple hundred of years, and this is the traditional way that every millionaires do it. Of course, we're going to exclude real estate because this video is only about stocks and crypto. Not to say that investing into cryptocurrency cannot be a long-term investment. It can definitely be a long-term investment, but you have to see on which coin you're invested into. So let's just say you're invested into bigger coins, like the well-known ones like Bitcoin, Ethereum. Then of course, by all means, you guys can go ahead and hold these coins for like 5 years, 10 years. Then who knows that this could really 10x or 100x, right? But if you're investing into smaller cap altcoins like, let's just say Cakecoin, which is the one that I'm invested into, you have to constantly monitor it, read the news, and stay confident into it because there are always new regulations coming out into the crypto space. As like I said earlier, people are still trying to regulate it and there are a lot of gray areas. You never know what could happen in the next few years, and certain regulations can wipe out certain entities in the crypto world. As for short term, we're actually looking at 1 minute up to 2 years. Stocks are actually good for long term and even for short term. So for short term, you guys can go ahead and look into swing trading or even day trading. And typically for this kind of trades, you guys have to rely more on technical analysis instead of fundamentals analysis. However, for cryptocurrencies, I'm gonna be honest, I do not see most of these projects lasting up to more than 5 years. So it's more or less a short-term to a mid-term kind of investments. But along the way, we might see some really good projects popping up, and that is when we have to rotate our money from here to there to continue maximizing our gains and to escape from shitty projects in the future. So it is really an active investing strategy when it comes to investing into cryptocurrencies. The fourth point, ownership and possession. For stocks, it really depends on what broker do you use. If you use banks like Affin Hwang or Huobi, KKN, etc., which is the one that I'm using, then yes, you can legally own stocks under your name with solid paperwork as well. And not to mention, you can also attend AGMs and contribute to the company's discussion if you're actually owning stocks under your name. Let's pray to God that you do not mess the whole company up by voicing out. I'm talking to myself. But of course, you do have to have a certain amount of shares to actually be relevant in the company, which I do not have, so why am I even talking about this? But to be eligible for all of this, you'll have to go through quite a long process of verification and registration as well. So the good thing about not owning stocks under your name in the commission-free broker apps are actually because you do not need to pay taxes if you invest into the US market, and even your capital gains or dividends at all. For crypto, however, there is a famous saying goes, not your key, not your coins. So as long as you have a digital wallet or a cold wallet, then you have full control of your own crypto assets in your hand itself. That is also one of the reasons why I actually invested into a cold wallet itself. And here it is. If you guys want to go ahead and check the review out on this wallet, you guys can go ahead and click the top right. So here is actually my suggestion. Don't take this as a financial advice, okay? Start out with stocks and then slowly venture into cryptocurrency. I would like to put it this way. When it comes to investing, there is like a beginner level and then advanced level, and then somewhere in between is like a medium level and stuff like that, where you actually slowly make the transition. The reason why I suggest stock market investing for beginners is because there are not so many terms and stuff like that to learn, and it is less complicated comparing to the cryptocurrency market. In the crypto market, however, there are a lot to learn, and it also requires basic investing knowledge. So I would suggest you guys, if you're a beginner, if you want to admit you're a beginner, to start with the stock market. But the best way to maximize your returns is to have both, because diversification is always the key when it comes to investing. Now I know there are way more to cover to put these two assets into comparisons, but I only handpicked 4 of these factors. So I personally handpicked the most important one in my opinion, and for the rest, you guys can go ahead and do your own research, because at the end of the day, it is your money. If you lose money, you can't blame me. No, not me though. So if you found value in this video, don't forget to help me smash that like button, and I created a Discord group. Remember to join it, link in the description box below. So with that being said, I hope to see you guys in the next video.